The last few days have been some of the most interesting times we have seen in recent history for global financial markets. And I'm not just talking about crypto, I'm not talking about just the stock market, really all across the board. So we got a lot to unpack, both good and bad. Starting off with the good news. Good news is that CPI data came out in the November report, and U.S. inflation was much better than people were expecting. It came in at 7.7% versus all the expectations, which were at 7.9%. Not only this, we also saw a significant drop month over month from 8.2% the month before down to 7.7%. So this is showing us that finally everything the Federal Reserve has been doing to combat inflation is working. We're finally seeing inflation come back down, and this is signaling that potentially in the next meeting from the Federal Reserve, they may start slowing down their interest rate hikes. Previously, Jerome Powell, the Federal Reserve, said they need to see clear data that shows that inflation is coming back down, and this is pretty clear. They might still wait for one or two more consecutive reports, but either way, having numbers much better than expected caused excitement in the stock market and in crypto. We saw stock market have record-breaking days where NASDAQ rose over 7%, S&P 500 and Dow Jones had record-breaking days as well. So that is why we're seeing markets react so positively, because they're expecting a pivot in the Federal Reserve's policy towards inflation. But in other news, we've seen quite a bit of bad come out of crypto. I want to quickly interrupt today's video to bring you a word from our channel partner, Fairdesk. Fairdesk is one of our longest term sponsors on the channel, and they are a cryptocurrency exchange that offers up to 125x leverage. This is the platform where I have currently been doing a lot of my leverage trading as of recently, because they have a very simple and easy to use platform that really provides investors with access to the global crypto markets. Some of the features that I personally enjoy and use the most on Fairdesk are three things. First is that they have a simple mobile app with great charting features if you like technical analysis. The second is that they also offer leverage trading on dozens of the top trading cryptocurrencies. And the third is that they have easy access to short or long any of your favorite cryptos. If you sign up for Fairdesk today using the link in the description, you can get up to a $600 bonus when you deposit $100 or more. So if you're interested in trading crypto specifically with leverage, I definitely think you should check out Fairdesk. Remember, leverage trading is high risk, high reward, but I think this platform is definitely worth checking out. Anyways, let's get back to the program. And that has all to do with FTX and with Binance. So FTX officially has filed for Chapter 11 bankruptcy, which we all expected after more and more information came to light as to what they were doing with user funds. Basically, they had lent out billions of dollars in funds to Alameda Research, which is Sam Bankman-Fried's other company. They basically made risky bets, and all those bets went to zero. They lost billions of dollars in funds. Now they don't have enough money to pay back their customers. They don't have enough money to process withdrawals, and everything is completely falling apart. Not only that, but we also saw that Binance CEO, his bid and his original letter of intent to acquire FTX fell apart as well once they started looking further into the details. But what we're seeing right now from FTX is that they have officially filed for bankruptcy, and FTX founder Sam Bankman-Fried has officially also stepped down. So moving forward, what does this mean? Well, over the last few days, we've been talking on Twitter about make sure you always take your crypto off of exchanges, and make sure if you had anything on FTX US, you took it off. But there's really 5 main lessons that we can learn from everything going on, which I'll talk about in a minute. This has to do with how to store your crypto properly, how to limit your risk, and what I have been doing as of recently as a result of everything going on in 2022. In addition to Sam Bankman-Fried stepping down and them filing for bankruptcy, some interesting things came out in their reports and other news from Binance CEO. So Binance CEO, after looking further into the financials of FTX, he came out and basically warned the entire crypto space that more companies are going to fall, are going to collapse in the coming weeks as a result of the FTX collapse. We've already seen this information start to come out from Binance. Binance came out not from Binance, from BlockFi. Sorry. BlockFi recently just came out and said that they're in trouble as well. Rumors have it that BlockFi housed almost all of customers' funds on FTX. And again, that is going to be a major, major issue. BlockFi has officially stopped processing, has suspended all customer withdrawals. And that is, I believe, the first out of many more problems we are going to see coming out of this FTX collapse. It is really still just the beginning, so be very careful. And if Binance CEO CZ said after looking at the financials, things aren't looking good, I would expect more and more companies to come out in the coming weeks as well, saying things aren't what they seem, we are in big trouble. So last thing I want to go over, though, is the 5 main lessons, really, that you can take away from everything going on with FTX, because while it is painful, while it does hurt, these things happen in new industries. We see it happen quite a lot, and it's not all bad. So first main thing that I posted this on Twitter, but the first main thing is going to be that take your crypto off of exchanges if you're not actively trading. The most secure place to store your crypto is in cold wallets. Cold wallets are offline. They're not connected to the internet. This is the most secure place to store your crypto because it's not relying on any singular exchange. You have the key. You have the seed phrase. It is completely 100% secure. The only way you lose those funds is if you lose your seed phrase. Second lesson is going to be that only buy and sell crypto on exchanges that are implementing proof of reserve programs. And essentially what that is that now, since what happened with FTX, we're seeing many companies come out and say that they are going to be revealing to the general public what assets they currently have in their cold and hot wallets. We've already seen many companies already come out and announce what funds they have. We've seen Crypto.com say they're going to use proof of reserve. We saw Binance say they're going to use proof of reserve. We saw Bybit say they're going to use proof of reserve, and many more. There's a whole list I talked about on Twitter, so make sure you follow me there if you don't already. But make sure to trade your crypto on platforms that aren't playing games with people's assets and where they have proof of reserves, where you can see what money they have backing all of the users' assets. Third thing is going to be extremely careful when using leverage. What we've seen in 2022 is that there are a lot of unexpected things that are going to happen, from bankruptcies to Federal Reserve meetings to black swan events. And ultimately, the best, safest thing you can do is not use leverage, because then you are simply risking your account getting liquidated as a result of one random event that takes place on a single day. We see these big swings happen anytime one of these major news pieces come out, and it can cause your entire account to be liquidated. So it's unnecessary risk that you don't need to have, and I've seen so many people lose millions of dollars for simply using unnecessary leverage. Fourth thing is going to be to research everything, and whether you're investing in crypto, NFTs, or into stable coins, really you need to make sure you know exactly what you're getting into. Everyone thinks you need to be first into a crypto project, you need to be the earliest, but I would disagree. I'd say being first, being the earliest is helpful, but if 2022 has taught you anything, is to make sure you do your research and you know exactly what you're getting into. It doesn't matter if it's supposed to be stable. It doesn't matter if it's a stable coin. It's supposed to be backed one-to-one. Do your research into everything you're getting into. And last thing, number 5, is that it's not too late to get rich from crypto. Every single day, there are new projects, new NFTs, new play-to-earn games, new metaverses, everything all across the board being launched. And many of these are going to rise and become some of the top 10, top 20 projects in the next bull market. So make sure you are not discouraged from everything going on. You continually research, you continually learn, because whoever's sticking around now, whoever's continually investing and learning, those are the people who are going to be better off and really get rich during the next bull market. So that's what's going on in the crypto market right now. There's a lot of good with overall economy and economic data, but there's also a lot of bad with what happened with FTX. So just keep an eye on everything going on, but I hope you enjoyed today's video, and I'll see you guys in the next episode. See ya.